You've got a clear erosion of consumer confidence by a bunch, and so I think everyone knows that. I don't think you can sort of underestimate that. I think that it is sliding rapidly. I think we saw this, originally in the housing business. We had a very draconian view of housing starts. I think those views are being played out. It may even be that we were overly optimistic, although when we took that view, people said we were crazy. So I think consumer confidence generally, consumers drive the economy at the end of the day. And so that is going to continue to slide. Now, will it turn? Absolutely. It's going to turn. The only question is, when will that turn? And so it does drive what we're willing to do. So we are not doing investments today in highly consumer-oriented, highly discretionary companies that are in that business, either producing or distributing that sort of product. We're staying away from retail. Retail is going to be a disaster. I do think that the administration is doing the best they can, and they're certainly trying to do what they think is right. I actually think what they're doing is wrong. They're making mistakes that won't show up for a little while. But we have a very highly developed system, particularly on the restructuring side. So we have a very well-developed, heavily litigated restructuring world that starts with the bankruptcy code. And when you begin to play with that, when you begin to do things outside of that framework, you have unintended consequences. So, for example, when you start to give General Motors money up front and not use what would be used in a normal commercial setting, in a normal commercial setting, any real investor would say, look, General Motors, you should file for bankruptcy and we will provide a dip because the dip has super priority and we want to protect our investment. So if you file and you use the bankruptcy process to go through a restructuring, those rules are very well developed. But when you start doing things that are outside the norm, so another example, AIG, the government came in and gave a loan to AIG. That was done very much outside of a normal context. In a normal commercial setting, that wouldn't have happened. A commercial lender would not have given that money or lent that money to AIG. So what does it do? Well, the government said, in exchange for that loan, I want 79% of the equity. Why not 78? Why not 72? Why not 84? So all of a sudden you were outside you were outside the normal context, and therefore that deal will get litigated forever because they didn't use sort of the tested way of making an investment. Instead, they made an investment in exchange for equity. Now the equity holders are going to sue them and say, well, you took too much and it should have been 25% or should have been nothing. And so it concerns me when we have a very highly developed system, and that system is developed over a long period of time, and we begin to do things that are very much outside that system. It doesn't bother me that we do things outside the system, that we're creative. That's okay, but the ramifications, the unintended consequences, are not only unknown but unknowable.